Universal Credit 2026 shock, LCW payments, Vanish and health benefit cuts threaten UK seniors' future. Hello and welcome back to the channel. If you're in the UK and you're receiving universal credit, employment and support allowance, or if you're someone who relies on disability-related health benefits, then what I'm about to share with you is absolutely crucial. Big changes are coming in 2026, and these changes could dramatically alter the way people with limited capability for work are supported. The government has announced that the limited capability for work element, known as LCW, will be ending, and along with that, there are some major cuts and restructuring of health-related benefits that will directly affect seniors, disabled claimants, and low-income families. Now, this isn't just another bureaucratic adjustment. This is a shake-up of the entire welfare system, and it could mean less money in the pockets of some of the most vulnerable people in the UK. So, in today's video, we'll break down what exactly is changing, why the government says it's happening, who will be affected, and most importantly, what you can do to prepare yourself or your loved ones. Make sure you stay until the end, because I'll also share some hidden details, little talked about consequences, and even the potential alternatives that might come into play. First, let's talk about the LCW element itself. The limited capability for work component was originally introduced to help people who were assessed as unable to work due to health issues but still had some potential to take part in work-related activities in the future. It wasn't as high as the LCWRA, the limited capability for work and work-related activity element, but it was still a critical lifeline. For many households, that extra support meant the difference between barely scraping by and being able to cover essentials like food, heating and transport. But here's the shocking news. From 2026, the LCW element will be abolished. That means if you are currently receiving universal credit with an LCW designation, you will no longer receive those payments. The government claims this is part of a wider effort to simplify the benefit system and encourage more people back into work. Officials argue that by removing the LCW element, they can focus resources on those with the most severe conditions while providing work-focused support for others. Sounds reasonable on paper, right? But here's the problem. Removing the LCW element is effectively a stealth cut for thousands of people. The LCW top-up might not sound huge, but over the course of a year, it added hundreds of pounds to household budgets. Without it, families already struggling with rising rents, soaring energy bills, and food inflation are going to feel the pressure more than ever. Now, let's move on to the bigger picture of health benefit cuts that have also been revealed. The government is not just stopping at LCW, they are also reviewing how health-related benefits are awarded altogether. The changes are tied to the Health and Disability White Paper, which outlined reforms to the way assessments are carried out for sickness and disability benefits. What does this mean in practice? Well, under the new plan, there's going to be less emphasis on medical evidence and more on what's called functionality, essentially how your condition impacts your ability to do certain tasks. This could sound fair, but in reality, it often leads to harsh assessments where people with invisible or fluctuating conditions like mental health issues or chronic illnesses end up being denied support because they can perform tasks in a controlled setting even if they can't realistically sustain work in real life. This change ties into the abolition of the work capability assessment. Yes, you heard that right. By 2026, the government wants to completely scrap the WCA and replace it with a new system that ties disability support more directly to the Personal Independence Payment, PIP. At first glance, this might look like streamlining, but experts are warning it could mean a double whammy of cuts. If you don't qualify for PIP, you might also miss out on health-related universal credit support, leaving you with a much lower income than before. Let's break this down in simpler terms. If you're a claimant with health issues right now, you could be receiving Universal Credit-Based Payment, LCW or LCWRA top-up, possibly PIP depending on your disability. From 2026, the LCW top-up disappears. Only those who qualify for the LCWRA category, which is much stricter, will continue receiving a top-up. Eligibility will be more heavily tied to PIP assessments, meaning you have to jump through another hoop just to maintain your financial stability. In plain English, many people will lose money and only those with the most severe conditions will be protected. Now, let's talk numbers, because that's where the impact really hits home. Currently, the LCW element is worth around £146 a month. Over the course of a year, that's roughly £1,750, a huge amount for low-income households. Cutting this away is not just shaving off a little benefit, it's equivalent to removing more than a month's worth of food or energy bills for many families. For seniors, especially those who are not yet old enough for the state pension but rely on universal credit due to poor health, this cut is particularly brutal. Imagine being 61, having worked most of your life, but then suffering a condition that stops you from holding a job. Right now, you might qualify for UC plus LCW, but in 2026, that LCW lifeline is gone, leaving you in an even tighter bind until you reach pension age. So why is the government doing this? Officially, the Department for Work and Pensions says the reforms are about encouraging work, simplifying support, and making the system fairer. Ministers argue that too many people are being written off, and that the welfare system should focus more on what claimants can do rather than what they can't. But critics, including disability charities, senior advocacy groups, and even some MPs, say this is nothing more than a cost-cutting exercise dressed up as reform. The UK is facing rising welfare bills, and instead of raising revenue through taxes, the government appears to be balancing the books on the backs of the sick and vulnerable. And here's another angle that's not getting enough attention: mental health claimants. Right now, people with severe depression, anxiety, PTSD, or other mental health issues can qualify for LCW. These conditions often fluctuate, meaning some weeks are manageable while others are devastating. Without the LCW safety net, many of these individuals will be expected to job seek actively, attend interviews, and face sanctions if they don't. This could create a spiral where people are punished financially for conditions they have no control over. Let's pause for a moment and think about the real-life impact. Picture Sarah, a 55-year-old single woman with arthritis and mobility issues. She can do some tasks but struggles to walk long distances or sit for long periods. Under the current system, she's placed in the LCW group and receives the monthly top-up that helps her afford taxis to medical appointments and keeps her home warm in the winter. Come 2026, that top-up disappears. Sarah will either have to prove she's incapable of all work and qualify for LCWRA, which isn't guaranteed, or she'll be expected to job seek like any other claimant. Or think about John, a 30-year-old with severe depression. The LCW element provides him with a small financial cushion while he attends therapy and slowly builds stability. Under the new rules, John could lose that money unless he qualifies for PIP, which is notoriously difficult to get for mental health conditions. The stress of job seeking could push him further into crisis. Of course, there's also the political angle. The UK is heading towards a general election in the next couple of years. Welfare reforms are always politically charged. Some parties may oppose these cuts, promising to reverse them if they come into power. Others may support them in the name of austerity. So one way or another, the ballot box could play a role in how these reforms are finally implemented. That's why staying engaged with the political debate is more important than ever. Before we wrap up, let's recap the key takeaways from today's update. The LCW element of universal credit will end in 2026. Health benefit reforms will tie support more closely to PIP assessments. Thousands of people could lose up to £1,750 per year in support. Seniors and those with fluctuating conditions, especially mental health issues, are among the most at risk. Preparation is essential. Gather medical evidence, review PIP eligibility, and stay engaged politically. So, what do you think? Are these reforms about simplification and fairness, or are they just another cut disguised as reform? Drop your thoughts in the comments. I'd love to hear your perspective, especially if you're someone directly affected by these changes. And if you found this video helpful, please give it a thumbs up, share it with friends and family who might be impacted, and don't forget to subscribe so you don't miss future updates. We'll be covering all the latest on universal credit, pensions, and benefits changes right here, so stay tuned. Thanks for watching, and until next time, stay informed, stay prepared, and take care of yourselves.